Hello and welcome to the day ahead. It's Friday, October the 14th. I'm Andrew Gagan. Well, volatility dominated global markets as the latest US inflation data sent investors on a wild ride. Consumer prices for September came in higher than expected with the headline annual inflation rate of 8.2%. That had investors looking to further aggressive rate hikes from the Fed, sending stocks on Wall Street tumbling initially. The Nasdaq plummeted more than 3%, while the S&P 500 fell as much as 2.3% to its lowest point since November 2020, before a remarkable reversal as it swung 5% in the other direction. At the end of the session, the major indices there all rallying, up around 2.5%. All S&P sectors there ending high, led by financials, energy and infotech. Attention now turns to third quarter reporting season, which officially begins on Friday with the big banks, as investors look to see how a high interest rate environment affects company profits, while green boots rose following better than expected estimated fourth quarter results. Well, to the market moving US inflation data, and the consumer price index rose 0.4% last month after gaining 0.1% in August. Core CPI, which excludes food and fuel, climbed 0.6% in September, taking the annual rate increase to 6.6% compared with 6.3% in August. Underlying inflation is being largely driven by higher costs for rental accommodation, which shot up 0.8%. That's the largest increase since 1990, while food prices also increased 0.8%. And those increases were offset by an almost 5% decline in petrol prices. By year end, traders now expect the Fed funds rate to reach between 4.5% and 4.75%, and topping out at around 4.85% by March next year. The Fed's policy rate is currently between 3% and 3.25%. And futures prices also reflecting a 35% probability that rates will rise above 5%. And the inflation data sent the benchmark 10-year Treasury yield to a 14-year high of 4.08% before falling back to 3.9%. And the 2-year surged above 4.5% to its highest level since 2007. Major currencies were firmer against the US dollar. The Aussie dollar rose from lows of 61.7, then back above 63 US cents, currently just below that level. Well, ASX futures indicating the local share market is set to bounce higher this morning, as you can see, up more than 1.5%. Oil prices settled around 2% higher as low levels of diesel inventory in North America ahead of winter triggered buying and reversed early losses. Iron ore futures fell, while base metal prices were higher, led by aluminium, which continues to rally on the prospect of a US ban on supplies from Russia. Spot gold was little changed, and Bitcoin tumbled nearly 3% in the minutes after the US CPI report, but has since followed equities to bounce higher. And that is your day ahead. We'll see you again on Monday.